Tesla stock is now up 74% year to date in just one single month. And today, guess what? It went up again. Of course, there was no one who thought buying Tesla stock at $109 right after it dropped 11.5% almost in one single day was a good idea, except for us, retail Tesla stock investors. Someone said best to avoid Tesla stock at $112. There will be plenty of opportunities to go in like a boss at $300. Despite Tesla stock going up 74% in just one single month, I still believe it is so underpriced. Here's some incredibly good news. Model Y long-range delivery estimates have been changed to March, May, previously from February to March. So we skipped April. We just went straight to May. This is great. I fully agree with Gary here. He's right on the money. There's no other mega cap name that is putting up a 37% revenue growth and selling for under 45 times the 2023 earnings. It's just Tesla. Look at other names. Amazon, only up 9%. S&P 500 only up 6%, Microsoft 2%, Netflix 2%, Google 1%, Facebook down 4%, Apple down 5%. This is Q4 revenue growth year over year. So yeah, it's just Tesla. Just like this cold that I have, it makes my voice sound funny, can't stop me from making videos. So can neither anything stop Tesla long-term from becoming the world's largest company in the world. That's my personal deep belief. Let's do some comparisons. Look at Ford. The deliveries are going down, same for GM. There's a little bit of a spike here. These are deliveries for Tesla, which, obviously you would then expect that the profits or the revenues would not be very high in comparison to these two other companies because they deliver so many vehicles and Tesla does not deliver that many vehicles in relative terms. But this is revenue. This looks about maybe half of GM's and Ford's revenue. And this is profit, net income specifically. Ford lost money in 2022 and Tesla already made more money than these two combined. Let that sink in. And this is how much Tesla makes per vehicle. These you can barely even see. Ford is losing money. And on top of all of that, Tesla just forced Ford to cut prices for the Ford Mustang Mach-E. Interestingly, we are not hearing anything bad about Twitter anymore, really. This is actually good news for Twitter. Twitter just brought in new advertisers. But you know what's really ridiculous about all of this is that Tesla used to lose a whole lot of money. Any legacy automaker could have, in theory, entered the EV market and completely obliterated Tesla because they had more money, more experience. They knew how to, make cars without panel gaps. And yet Tesla won. And I believe Tesla is going to continue to dominate. It is really quite entertaining to watch this Tesla Q narrative. These are people that try to short Tesla's stock and make money from Tesla going down. There's actually this ETF called TSLQ. So if you buy this, you will make money when Tesla goes down. And interestingly, from its inception, it has now lost money. Not much, but I expect these losses to really accumulate. I'm talking about long-term, short-term, anything can happen. I hope Tesla stock goes down to $100 again. It only stayed there for such a short amount of time, and I wish I could have loaded up a whole bunch more. The Tesla Q narrative over time has been so ridiculous. No one wants EVs. The competition is coming. Bankrupt soon. In 2019, by the way, early 2019 is when I got in because I believed there's no way Tesla's going to go bankrupt now. So That's when I got in. And now you don't really hear about that anymore. Not at all, even from the worst of shorts, unless they really have no brain, like Stephen Mark Ryan would say. Elon is a fraud. That's a common one now. Prices are too high. There's no demand. FSD is vaporware. Bought is a stock pump. And in 2030, here's what they are going to say, says Steve Mark Ryan. Tesla's $500 billion net income is a disappointment. Right now, Tesla's market cap is roughly around that level. The mainstream has always gotten the Tesla stock and the Tesla company story completely wrong. Tesla delivered exactly almost a few cars short of 500,000 vehicles in 2020, which everyone basically said, yeah, that is not happening. This is extremely exciting. Tesla is reported close to setting up a large 29,700 square meter, not square feet, square meter office in the middle of Silicon Valley to recruit AI talent. That's 319,000 square feet. And Cybertruck, I believe, is going to be extremely important to Tesla. We are now seeing more of these prototypes out in the wild, and it looks incredible. We now have some interesting data for US sales, January of this year compared to just last December. Tesla, we can see, is up. Everyone else? No. And here's the source of data. We'll see if perhaps Tesla is going to beat earnings consensus again. And this is while other companies are missing earnings. Yeah, Tesla has not really done that. They beat the earnings estimates. Jason has millions of dollars in Tesla stock. Many retail investors understand Tesla better than any Wall Street analyst, any famous author, or any famous investor. Those people don't have time to research Tesla at the level that we do. Retail investors on Tesla Twitter understand Tesla better than anyone. Although I do have to say there are some exceptions. Emotion gets to some of us. Here are a few principles that I find quite helpful to navigate this market. Investing, of course, is extremely volatile. In the long term, stocks are actually not that risky. You have to be aware of how emotions are going to play with you. You go from $10 to $20, you'll be happy. You go from $10 to $20, but if a stock was at $30 in the meantime, you may feel miserable. You want to get over that. Be careful who you listen to because there have been some people that freaked out when Tesla stock went down a lot. And some of these people said that they can handle the volatility, and turns out maybe no. So be careful here. Buy damaged stocks, not damaged companies. So if you see revenue or profits going up while the stock is going down, probably a good deal. While if you see revenues going down and profits collapsing at the same time too, then yeah, run. Tesla's revenues are going up while, well, some other companies, I don't think it's really going up. This somehow sounds really familiar, but I just don't know how or why. I just wanted to share this with you. The CEO has been purposefully tanking the stock, getting all political, and then selling shares to fund his pet project, Trunk Kitties. Trunk Kitties. Can you believe it? Wow. Certainly, it's not a company that's going to catch tweeting birds, right? I don't know. Probably has nothing to do with that. And yes, I will say it. Board of directors, Tesla Diva 99, and a few others have been negligent. I'll run to represent retail. Good luck, Herbert. And this one, when you really think about it, just blows your mind. These charts, my mind is blown, says Sam Corris from ARK Invest. There were no 300-mile range EVs. Then Tesla introduced one in 2015. It took 6 years until another company offered one in the US. 6 years. That's how far behind most Tesla competitors are. Elon Musk is giving us another warning to not buy stock using margin loans, with which I fully agree. I have never done that, and I would not let anyone from my family do that. Even if I believed in a stock 100%, there were quite a few people that got wiped out when Tesla stock was down so much. And now, because they lost all of their stock, they're not seeing these gains, 74% in just 1 month. This is Elon Musk explaining Tesla stock buying opportunity in 20 minutes. My name is Matt Moses. Like and subscribe if you haven't yet, and I will see you in the next video. Hopefully my voice will be a little bit better, although probably not. I'll probably need a few more days to get better. This cold is brutal.